Alright, so today the market is falling. We see the main indices correcting and triggering top signals, which suggests a sharper correction ahead. So how worried should we be about this, and what should we expect if the worst comes to the worst? This is what we're gonna talk about in this video. Welcome to the Finance Hydra channel. My name is Nathan, professional trader, founder of the 5% project, where we teach you to trade without stress, sharing our trading signals and strategies every single day. Our methodology is so good that it has already yielded excellent returns for our members. And by signing up right now, you get 7 days for free just to test our service. No strings attached. So just take a look at our website. The QR code's right here, link in the fixed comment below. Now, as we can see here, SPY is triggering a top signal, which we did warn yesterday. The moment I was recording this video, it was a dark cloud cover candlestick pattern, but in the end, it turned out to be a bearish engulfing candlestick pattern, which just reinforces the bearishness over here on SPY. Of course, this bearishness, it is not an actual bearish reversal chart structure. Instead, it is just a pullback over here, all right? Because so far the trend is still bullish. We still see SPY making higher highs, higher lows. We don't see lower highs, lower lows yet. Therefore, the trend is still bullish despite the possibility of a pullback over here. Now, Nathan, how sharp could be a pullback on SPY? Well, we have many support levels to work with. The first one is the 21 EMA, the exponential moving average on the daily chart, and this is our first technical target, the first technical support level over here. It could also close this open gap, or maybe even it could retest the purple line over here, the bottom line of this ascending channel. And the bullish bias, the mid-term bullish bias, would remain intact. Only a crystal clear bearish reversal chart structure would bring an actual bearish reversal, all right? Right now, we see a top signal suggesting a mid-term pullback. Not necessarily a reversal yet. It is too soon to talk about reversals. And as far as I know, pullbacks in both trends are nothing more, nothing less than buying opportunities, because the risk-reward ratio is optimized, because the price is near a support level, which is the best place ever to buy anything. So this is how I see the situation, all right? If we see a pullback, great. It is not a reason to panic. Probably it is going to be just another buying opportunity if we see a bottom signal around a support level. Always buy near support levels, always sell near resistance levels. If you were to sell, wait for it to reach a crystal clear technical resistance. And of course, preferably in a bear trend, all right? Because if you sell while we are in a bull trend, because you may be asking, Nathan, it is worth to sell over here only if you have a very strict and detailed technique, because when we sell against the trend, well, bear in mind, you are against the trend, so the odds are not necessarily in your favor. So you gotta use a very good risk management strategy, and you gotta use a very nice technique in order to go against the trend, all right? We often do that on our Telegram channel, but we must do it with intelligence, all right? Using a crystal clear strategy. So just be careful over here, all right? Because the trend is still bullish despite the possibility of a pullback. The QQQ shares a similar chart structure, suggesting that tech stocks are quite strong because we are very far away from our support levels. We are very far from the 21 EMA on the daily chart over here. And this reflects on many stocks, but when we analyze the Magnificent 7 over here, we see that they are quite detached from the broad market. Microsoft did a top signal over here a few days ago. This top signal wasn't triggered because we failed to close below this candle's low over here, and right now we are trying to reject this bearish structure over here, this bearish signal over here, by making a bullish candlestick and by almost breaking this candle's high over here, almost renewing the all-time high. So Microsoft is still insanely bullish, and we don't see a crystal clear top signal getting triggered over here yet, unlike SPY, unlike QQQ. And the same scenario applies to Google, which is insanely bullish. I think Google is on the verge of breaking its all-time high over here, and it is on the verge of breaking free from this congestion, right? Because we see a sort of congestion, a sort of ascending triangle chart pattern, which is only another bullish evidence. So many of the Magnificent Seven stocks over here are quite strong. They are still very bullish. Amazon is very bullish. It is going up today. I know it is making a bearish candlestick pattern, but we are on the verge of triggering this bullish pivot point by making a higher high, higher low. So we see many bullish chart structures on most of the Magnificent Seven over here. Although Apple is correcting, although Apple did trigger a top signal, here we see a crystal clear dark cloud cover candlestick pattern, alright, which is a bearish reversal candlestick pattern roughly 60% of the time, according to Bulkowski studies, as we detailed yesterday. So, alright, this pattern was triggered, but right now we are stabilizing around yesterday's close. So we are not materializing a sharper correction, or at least this correction is not as sharp as expected. It is still quite resilient despite this pullback over here. So if you ask me, guys, SPY, QQQ, Apple, and the other stocks are supposed to retest their 21 EMAs on the daily chart. Meta is another one that is, Meta has just reached its 21 EMA. A few minutes ago, it was still above this moving average, but right now, we just retested our 21 EMA. So this is how I see SPY, QQQ, and Apple materializing their next movements, all right? I see pullbacks to their 21 EMAs, and then this is it. Maybe if we see a bottom signal, if we see a bullish reaction around their support levels, then great, we're gonna see possibly buying opportunities on many stocks, not only on these stocks I'm describing to you guys, but on other stocks as well. But so far, we don't see any meaningful bullish reaction, all right? Only Microsoft, Google, and Amazon. These ones are very bullish. They are still very bullish. They are maintaining their bullish bias, and we don't see clear top signals getting triggered on them yet. Now, Nvidia, unlike these stocks, Nvidia is actually materializing a top signal, just like Apple, which triggered a dark cloud cover candlestick pattern. Nvidia is right now triggering this bearish engulfing candlestick pattern over here, suggesting a sharper correction, possibly to the 21 EMA on the daily chart as well, all right? So as we can see here, these stocks are quite stretched, all right? And they deserve a pullback. We deserve to see these stocks correcting to their support levels. What's the problem? The problem is that the 125, the previous top level, is acting as a support level for us today. Another crystal clear example of the principle of polarity in technical analysis, which states that previous top levels are going to act as future support levels and vice versa. So by losing the 125, I see a sharper correction on Nvidia. I see a decent correction on Nvidia. Right now, we are still above the support level. I know we triggered this bearish engulfing, but in my humble opinion, we should see Nvidia losing the 125 area in order to materialize a decent correction. And the Tesla is still very bearish, long-term speaking. When we analyze the weekly chart over here, we see the 21 EMA acting as a very strong resistance level for us for many, many weeks, right? It has been months that this 21 EMA is frustrating any possibility of a bullish reaction over here on the weekly chart. And right now, seeing this reaction on the daily chart just reinforces the bearishness on the weekly chart. In order to actually reject any possibility of a bearish continuation, we gotta break and close above the $187 area. Then, and only then, we may see a bullish pivot point over here getting triggered, right? A crystal clear higher high, higher low, like Amazon is about to do, like Microsoft is doing over here, higher highs, higher lows, right? Guys, remember, bull trends are made of higher highs, higher lows. Bear trends are made of lower highs, lower lows. And this is why I'm telling you guys, despite the possible correction on the indices, despite a few top signals, some of the Magnificent 7 stocks are showing to us the bias is still bullish. We don't see any meaningful bearish reversal chart structure yet. If we do, great. I will warn you guys over here in this channel. But so far, the situation is still under control. We are still bullish. And this is what Tesla has to do in order to actually frustrate any possibility of a bearish bias over here. We gotta see higher highs, higher lows. We don't see higher highs, higher lows yet. So far, Tesla is just stabilizing around this area between the 187 and the 167 down here. We see Tesla inside a congestion. It is crystal clear inside a congestion. Unlike most of the Magnificent 7 stocks, this one is not bullish. It is inside a congestion. Oh, but Nathan, we are above the 21 EMA on the daily chart. Well, this doesn't mean anything because during congestions, the moving average becomes useless, all right? So 187, this is the key point we gotta see Tesla breaking in order to materialize a very good movement. Today's reaction is just a meaningless, pathetic reaction. We are not making anything new. We are just stabilizing near yesterday's close as well, and this is it, all right? We don't see any meaningful reaction right here, right now. Bullish or bearish, there is absolutely nothing, but as far as I know, if we don't do anything as soon as possible, the bearish bias will probably continue on the weekly chart. Therefore, guys, 187, this is our main nemesis over here. We gotta break 187 in order to materialize a bullish reaction, a bullish rally over here, possibly closing this gap at 206. Oh, and before I forget, Palantir is collapsing 7%, more than 7% today. Palantir is about to retest its 21 EMA on the daily chart over here. We don't see any meaningful bullish reaction, but if we do see one, I believe it is gonna be a very good buying opportunity. What Palantir is doing right here, right now, is what many of these stocks should do in the next few days, right? A correction back to their 21 EMAs, all right? So Palantir is only faster than other stocks, all right, which is totally understandable because it is a higher beta stock. So it is just collapsing, retesting its moving average, trading around the previous top level, which is supposed to be a support level for us right here at around the $24. So if next week we see a meaningful bullish reaction, maybe a piercing line or a bullish engulfing candlestick pattern as well, I believe it is gonna be another buying opportunity. So yes, Palantir is under my personal radar right now because I believe that we could see a very good opportunity if the right reaction occurs. Trading is reactive, it is not predictive, so let's wait for a crystal clear reaction to materialize over here, all right? I'm gonna keep you guys updated every single day in this channel, therefore consider subscribing. Click the like button to support me as well. Thank you for your audience. See you guys Monday. Stay safe. Bye-bye.